Hi, welcome everyone again to another financial analysis video. I'm Moeed Amin and I'm joined by my good friend and colleague, Ted Wayman. So today we're going to be looking at a well-known company, Twitter, right? They've been on the news a lot with Elon Musk's recent bid for $44 billion for this company. A lot of information about them and what he's doing in the press. So we're going to be looking at the financial analysis, so reading their financial statements. And this show is for those people that are really interested in raising their financial acumen, financial knowledge, financial proficiency, whether that's for investment purposes, sales purposes, or for your career progression. As Warren Buffett said, finance is the language of business. So if you want to move up in the business world, you've got to be able to speak the language. And that's what we're going to help you do today. So don't forget to like, share, subscribe. Most of our videos, about 98% of them, actually the companies we analyze, come from you, the viewers, and your requests. So as a subscriber, you will receive instant notification when we publish the video that you are interested in. So don't forget to do that. So let's jump into some information about Twitter before we go into the finances. Don't need to talk too much about it. I think it's pretty well known. So, social networking business, a platform, posts in the form of tweets with limited characters, around 160 characters, and some facts about them. 350,000 tweets are posted every minute, roughly, and that equates to about 500 million tweets per day. Just to put that into context, Facebook is around 3 million posts per minute, right? So you get a bit of an idea in terms of the scale of Twitter, but compared with Twitter and Facebook. Interestingly, the person with the most followers on Twitter, I don't know if any of you can guess this, it's actually Barack Obama. So latest count is around 131 million followers. So he has the most followers on this platform. We're going to go on to the share price. So stick around till the end because we talk about the share price. It's really important to get that context when you're looking at the financial statement. Of course, we're looking at the retrospective financial statement, but it's always good to have a look at that share price so you get a balanced view as well. But stick around, we're going to come on to that. Interestingly enough, they floated in 2013. Now, if you'd invested back then, you'd be sitting on a profit of around 15%, which is quite low when we look at some of the companies that we've analyzed in the past in the technology sector. Often they've been in late hundreds, if not thousands of percentage points. So pretty interesting to look at that. If you'd invested 5 years ago, you'd be sitting on an increase of 157%. And if you'd invested last year, you'd be sitting on a decline of 7%. So we're going to come on to that again, stick around. So Ted, let's share with our viewers what we've analyzed about this company and the interesting facts behind them.
Absolutely. So good to see you, Moeed. Welcome to our viewers. I too am not a massive user of Twitter. I think I do have a Twitter account and I have tweeted or twatted or whatever they call it a few times, but it's not big on my, I have to admit, it just kind of, there's only a limited number of hours in the world. And Moeed, you and I are spending far too much time making these videos to spend a lot of time actually on Twitter. So here we go. Here are the 2021 annual report from Twitter, and we are as ever going to whiz through all of the detailed information about tells you who they are, what they do, what their strategy is, corporate governance, etc., and we are going to go down and find the actual numbers. So this is what we're interested in. Here it is. So here's our report from the account from PricewaterhouseCoopers, who are their auditors, and we end up with their income statement. So you should be able to see on your screen now the income statement. That's the trading, the profit and loss account, and top line we see is their revenue. So let me get my annotation up. Here we go. And you can see the revenue. We are dealing in, so we are dealing in thousands. You'll notice it says thousands up at the top there, and therefore, so there it is. There says thousands, and so we're dealing in 5,000 million, so 5 billion. So just so we understand the kind of the numbers. So turnover for 2021 is about 5 billion. And that's up from 2020, 3.7 billion and 3.5 billion. Now, I don't know exactly the business model, but I think, Twitter's basically driven through advertising revenue. And this is pretty small advertising revenue. You mentioned Facebook, for example. There is a video on Facebook. If you want to kind of compare and contrast, do search for our video on Facebook. It's now known as Meta, but when we did it was known as Facebook. It may be 2020 numbers we're looking at, but from memory, turnover is about 60 billion, something like that. So it's, Facebook has monetized its offering, and these guys, they've never really managed to monetize their offering. So also what's quite interesting is this cost of revenue. Now, I'm not sure exactly what that cost is, because when you think about it, what does Twitter sell? It sells advertising space on its platform. So how it can cost $2 million to actually provide that space, I'm not absolutely certain. I'd expect that to be a much smaller number. That's about
$2 billion, right?
$1.8 billion. Yeah, sorry.
Yeah.
So $1.8 billion, and that's about a 35%. So they're still making a very good margin, gross margin of 65%. But that 65%. I mean, Moe, that's the same as Coca-Cola. They operate on about a 60% gross margin, and they sell a physical product. These guys, it's just an electronic. So I don't quite get that kind of cost of revenue. It just seems quite high to me. But then my knowledge of the kind of the underlying business is limited. I'm just coming at this from a financial perspective, as we say. So if any of our viewers has any insight, would like to share what makes up $1.8 billion of cost of revenue, that's the cost of sales, the cost of the thing that Twitter is selling, please do leave a comment in the comment section. We love to hear your comments. Please do be polite, though. On this channel, we are very much into being polite. Not, I would say, Moeed, that everybody on Twitter is particularly polite, which is maybe a reason why you and I don't use it that much. So I've just circled the kind of the SG&A, the Sales General Administrative. You'll notice there's a lot being spent on R&D up there. You'll remember, if those of you who've seen Facebook, there was a lot on Facebook, R&D in Facebook, because Facebook knows that the Facebook offering is going to be less relevant to the next generation. They've got to invent the next best thing. For example, my kids are not on Facebook, and the reason my kids are not on Facebook is because I'm on Facebook. Twitter may be slightly different. It's less kind of generational. But are the kids going to be on Twitter? Are they going to find another platform? There's a kind of research and development, which is all about the future. Anyway, we come down to the total costs of running the business, 5.6 billion on revenue of 5.1 billion, leaving them with an operating loss. And you'll notice that operating loss, they have been operating at a profit over the past few years, but it's pretty small numbers. I mean, you're really talking about break even, 26 million profit on 3.7 billion turnover. That's break even in my book. And even 366 million profit in 2019, it is not a massive number. So just so that we can kind of, that's about an 11% operating margin, 1% operating margin in 2020, and we're down to a negative 10% loss margin in 2021. Few other things quite interesting here. Again, I'm not a tax accountant, but this line here is quite interesting. They get a tax. So just to be careful here of your numbers. So if it's got brackets around it, it's a negative, it's a benefit, it's a tax refund. So it's a negative cost, so to speak. So in 2019, they got a tax rebate of $1 billion. So that sounds pretty good to me. I'd love to get a tax rebate of $1 billion, I have to admit. And so that kind of drove their bottom line of $1.5 billion profit, mainly driven by a tax rebate. And then in the following year, they get a big tax bill for $1 billion, and that drives their loss of 1 billion. So those numbers are kind of bouncing around a little bit, and I'm not sure exactly what's going on there. But they finally get, they get a tax rebate again in 2021. So that $411 million loss turns into only a $221 million loss as that tax rebate comes through. And you'll notice also there's a little bit of interest expense. There it is, interest expense. Again, they've now put the interest expense in brackets and the interest income in a positive. So they're kind of, you just got to be quite careful. And if you are doing your own analysis, do remember kind of, sometimes, a positive isn't necessarily revenue. It could be a cost like it is up at the top here, and a negative isn't necessarily a cost. It might be an income, as it is, for example, down here. But anyway, the summary is that they're paying some interest. If they're paying interest, they must have debt. They've got a little bit of interest income, and they're getting these tax rebates. Bottom line, they're making a loss. They made a loss of $221 million. And if you take the last 2 years together, they're pretty much at break even. So it's not making a lot of money. I mean, I guess that's the point we're making here. It's generating some revenue at the top line. And then just a kind of little comment that Elon Musk is talking about kind of, removing advertising so that he doesn't want to get the revenue from that, and then charging certain people to use it. So saying if you're a politician, you have to charge, you have to pay to use it. And if you are a journalist, you will have to pay to use it. And my understanding is that it's a very favored platform by journalists, because they get access to latest news of what's going on, and it's also a good platform for politicians, for people like Trump, although Trump has his own social media platform now, and so will he come back. Moving on to the balance sheet. So here is the balance sheet. We are looking at the assets first of all. So the assets, quite a lot of cash they've got, and we'll take these two numbers together as cash, because short-term investment is, for a company, just another word for cash. So they're sitting on about $6.3 billion of cash. So it's always worth thinking about, when Elon Musk bids, I can't remember what the number you said it was. Was it $41 billion, Moeed?
It was 44.
44. So when he bids 44, he's bidding for a company that's already got $6 billion of cash in the bank. So in effect, it's only costing him a net 38 billion. So just sort of bear that in mind. So but he's got 6 billion of cash. It's owed some money by I guess advertisers. So the total current assets is about 8 billion there. Then they got some property, plant and equipment, not a lot, bit of photocopiers, which they're kind of on hire purchase, so to speak, but a goodwill, because they've they'll have bought other companies as well and kind of amalgamated them onto the into the platform. And you can see there's this deferred tax asset, whatever that is. So nothing really, not massive amounts of assets. So only $14 billion worth of assets. And you'd expect, like a technology company like this, not to have too many assets, but it's got a reasonable amount of cash in the bank. On the liability side, total liabilities are 6.8 billion. There they are. And the big numbers are, we've got some accounts payable up here. These are the suppliers, but mainly we've got debt. So there's the debt for the company, which is just over $4 billion. And then they've got some long-term lease liabilities, and those lease liabilities together with their lease liabilities here and the current liabilities, and those kind of match off against those leased assets that sit on the asset side. So we can kind of look at those two as a contrast. So what we're really saying is they don't really owe much to anybody. That kind of makes sense. They've got enough cash. They're paying their suppliers, to the extent that they have suppliers. And they funded the business through debt. They do have some debt, and they are paying interest on that debt, but they're not making a lot of profit. So I'm not sure, they're not going to be able to borrow a lot more. Let's put it like that. Down the bottom, we've got the equity. So you'll notice the equity, lots of paid in capital here. So that's these numbers here. So a little bit of kind of initial capital, but really it's all funded through subsequent share issues, and it's been making a loss over the time. So it's lost $1 billion. So basically, they're kind of they're sitting on net assets of 7 billion. That's the assets less the liabilities. 14 billion of assets, 7 billion of liabilities, 7 billion of net assets, and that 7 billion of net assets is represented by 8 billion invested by the shareholders, of which Twitter has lost 1 billion. So it's financially, just from a financial perspective, it's not a kind of, it's not like, wow, this is just a great investment. Haven't they done well? It's kind of like, well, they've raised a lot of money, but they've lost 1 billion of it. And are they going to turn the corner? If they floated in 2013, and here we are nearly 10 years later, and they still haven't really kind of monetized their offering. And we think about the world today with kind of, jam tomorrow stocks falling out of favor, and people going to jam today, not technology, sorry, mining companies, oil companies, etc., people who actually, proven track records and are producing profits, Coca-Cola springs to mind, for example, then this company is not really appealing to me. So I think that, if you think about the bid by Elon Musk, I would suggest that that's driven quite a lot by ego and less by kind of financial savvy. It's kind of like, he's buying it because he can afford it, so to speak, although it's not all his money. He does have some investors, and the deal hasn't yet gone through, as you mentioned, Moeed. Here's the cash flow. So cash flow, again, is very important. You'll notice, so there's the profit at the bottom. It is cash positive. So that is a good sign. You'll remember that's my favorite number there, Moeed. So the company is generating cash. Some of the big numbers that are causing that, we've got depreciation and amortization, stock-based compensation. So employees are being paid in shares rather than in physical dollars. That's kind of, giving them invested interest, although you describing the share price, and we'll look at the share price, that would have been quite a rocky ride for some of them. There'd be sort of some days when they were pretty happy with their share-based compensation, some days when they're not. So remember, if I pay you in shares, Moeed, it's still a cost to me as a business, but it doesn't affect my cash flow. So that's why it appears as an addition back. And to a certain extent, those are the two big numbers. So if you ignore depreciation and you ignore stock-based compensation, you're going to be making cash rather than losing cash. But they are cash positive, and that is good. Let's look at their investing activities. So this is the next section. So investing activities. So be careful here. So these numbers here, in fact, these three numbers, this is all about proceeds from marketable securities, and purchases of marketable securities. We've talked about that before, Moeed. Marketable securities, another word for bonds. Bonds are, debt instruments issued by companies and governments, and it's where companies who have lots of cash invest their money. So the way to think about marketable securities is a bit like for you and me, Moeed, it's like a deposit account. I've got a bit too much extra cash. I stick it in my deposit account and earn a little bit extra interest. And when I need it, I just take the money out. So when you see this negative number, this is Twitter putting money in its deposit account, and this is Twitter taking money out of its deposit account. So for example, in the previous year, you'll notice that they put 6 billion in and they took 4.5 billion out. So when they say, oh, we are investing 1.6 billion in investing activities, actually the number you're really interested in is this one up here, which is the purchase of property, plant and equipment. Now, not a big issue for these guys, and it's $1 billion this year in terms of their investment. But don't forget, these guys, this is not a massive investment capital business. This isn't like, so this isn't like BMW, who have to invest in manufacturing equipment, or like EDF, who have to invest in, energy stations, or BP that has to invest in kind of oil drilling facilities, et cetera, et cetera. So, we have to kind of read these numbers relative to the business that we are looking at. And then the last section down here, we've got the financing activities. You'll notice there's the debt. So they have been borrowing money, and they've been borrowing money for the past week. So they have been funding this through debt. And every year they're going to the banks and saying, I need to borrow 700 million. I need 1 billion. I need 1.5 billion. And obviously that's going to have a positive effect on its cash flow, but it's going to start to squeeze the balance sheet a little bit. And at some point, the banks are just going to go, no, you know what? I'm not going to lend you any more money. Now, this is a public company, in exactly the same way. If you take this private, I don't know what Elon Musk's plan is, whether he's actually going to replace all the debt with equity and basically kind of, de-risk that balance sheet, so to speak, or whether he's going to take it exactly as it is. We have got a little bit of repayment. So all of this together, if you take it down to about here, what you do have is kind of some refinancing. So he is using some of that. Twitter, say Elon Musk, he doesn't own the company yet. So Twitter is using some of that money it raises to repay notes, which is a kind of a form of refinancing. So we're going to have to take that section net, and you can still see on a net basis there's more debt than there was. Effectively, that's what we're saying. But you can see for example here, they borrowed 700 and repaid 935. That's effectively they reduced their debt, and since then they've been increasing their debt. Quite interesting here, stock buybacks. Okay, so they're not paying dividends because they're not profitable, but they do have cash, and they have been buying back their stock. Obviously, if you buy back your stock, then theoretically the value of your stock goes up. So even though you mentioned the kind of the investors are not sitting on kind of multi-bagger gains, and they're all kind of laughing all the way to the bank, and even though the company the share price has been falling, certainly before Elon Musk's bid, Twitter has been out in the market buying shares in Twitter. And you could either say that was in order to prop up the share price, or you could say that was merely Twitter taking advantage of feeling that its shares are undervalued in the market. It has cash, and that is a useful use of investors' cash. Okay, and I'll leave our viewers to decide which they think is the most kind of relevant or the most applicable of those two arguments. So our summary is at the end of the day that they've got cash, and we can see this bit down the bottom. They are sitting on cash. They've got this kind of 2 billion of cash plus the 4 billion of marketable securities, which is, for sake of our argument, cash as well. And that effectively looks to me like those are the key numbers for Twitter. I don't think there's anything really that we can add from their business. Their current ratio, for example, liquidity ratio is kind of nearly 6 times, which means that they are they're not going to go bust. They've got lots of cash in the bank. They're not going to go pop. It's just that I struggle to see the value that perhaps Elon Musk sees in the business. So let's just revisit that share price and see what's going on there. So here is the latest share price. It's actually yesterday rather than today. So this is in dollars. It's nearly $48 per share. You can see the sort of the rocky ride that you were describing there, Moe. So if I was an employee and I'd been paid in shares, but from flotation to 2017, I'd have been feeling pretty unhappy as my share value basically is like a pay cut effectively goes down. And then from 2017, I'd be feeling reasonably happy. So you can kind of see the sort of here's the chart down 2017. So the company looks like it's on the way down, and then since then it's kind of been trending upwards. And we'll just kind of do our little chartist kind of. So there's our kind of trading pattern, and then it really has kind of fallen off. And I forget exactly when Trump. That looks like pandemic. Actually, pandemic would be somewhere around here. So the pandemic would be somewhere around here. I forget exactly when Trump was kind of on his US Capitol and all that kind of stuff. But it's I don't know exactly what is driving a lot of these kind of these dips. Obviously, it's up here because of Elon Musk's bid. So the bid will be coming in about here, and everyone goes, "Oh wow, Elon Musk's going to bid for Twitter, and therefore the share price will go up." Now, if he's going to bid 44 billion, it's currently got a market cap of 36 billion. So the theory is, if you think that this is going to go through, if you're convinced that actually Musk is serious, he is going to be able to get his money together, then that should go up, and you should be able to make $5 or $6 or so on each share. However, of course, if he doesn't go through, if he withdraws, if he may renegotiate, he may get to the the 11th hour, just like a kind of a house. You kind of just get to the exchange point. You just go, actually, I want you to drop the price by 100,000, and the sellers are so exasperated by that point, they just go, you know what, you can have it, type of thing. So potentially, there is this, you see this trend down here. What happens if the bid doesn't go through? You've got a company here which is struggling in terms of its kind of its ethical kind of standing in the community. Think about the trolls and is it a platform for free speech, or is it a platform for vitriol? And interestingly enough, there was a comment on the radio this morning which I thought was very relevant, talking about Twitter. They said it's quite interesting that in a democratic world of free speech, and Twitter is kind of probably that kind of really held up as that kind of that free speech platform. It's controlled by multi-billionaires, not by the democratic process. So Elon Musk will, if he owns it, he will decide who can post on it and what they can post. So we end up with a sort of a democratic platform controlled effectively by one person. Whether you think that is a good thing or a bad thing, I will, is outside the scope of this this presentation. So there we go, Moe. That's effectively my kind of take on Twitter. Am I an investor? No. Was I investor? No, I couldn't. I get it, and I can see the kind of the the benefit, and I have looked at some people's tweets and the kind of the excitement that you can get, and telling people about your events and so on and so forth, and what's going on in the world, and I can see why it's useful for journalists, and I can see why it's useful for politicians, and I can see that there's quite a lot of kind of vitriol and nasty comments out there. And luckily, so far we've managed to avoid that on this channel. So thank you very much to all of our viewers for your positive comments. And we do make errors. I do make mistakes, and when I do make mistakes, you point them out, but you point them out in a nice, kind and friendly way, which I think is important for any civilized society. So I'm not an investor. I'm not going to be buying shares in Twitter. Good luck to Elon Musk if he buys it. I'm just struggling to see how he's going to monetize it from a financial perspective, or is it just an ego bid?
Great. Yeah. Thank you, Ted. And love to hear our viewers' thoughts on this. So if you have any strong feelings, again, be polite. Do leave a note in the comments section. And of course, if there's a company that you would like us to analyze for you, that you're really interested in, whether you are, again, investing in that company, trying to do business with them, or you're actually going to be hired by them and you want to present yourself as smart in the interview process, do leave a note in the comment section. Give us a bit of context as to why you're interested in this company. And we'll do our best to get your video out as soon as possible. So until the next video, thank you, Ted. Thank you, everyone else. Oh, and one thing is also, if you're interested in getting a comparison, as Ted mentioned, on other companies similar to Twitter, we did an analysis on Facebook, and you can search for that. We'll probably leave a link to that video as well for you. So until the next video, thank you, everyone. We'll see you soon.
Good to see you, Moe. Catch you later, everyone.